Oh, welcome everyone. I have an exciting episode for you today with Tate and Lyle. Now, a lot of people, probably in the UK, may recognise Lyle's Golden Syrup and Tate and Lyle's Sugar. However, they divested all their sugar products back in 2010. So unfortunately, they actually don't own anything to do with their sugar business at all. In fact, most of their business now is geared towards reduction of sugar with ingredients across many industries. And we're going to have a wee look into it. They seem to be leaning more towards like sweeteners, there you go, texturants, fibers, stabilizers. So the likelihood that you've ever had a Tate and Lyle ingredient now in your home, they reckon there's nearly a 96% chance that the products in most of the world contain an ingredient from Tate and Lyle. So that's pretty crazy. So let's have a look through their website. I'll have this linked in a pinned comment below for you, lads. Find ingredients, partner with us. It's crazy how a sugar company, which is where they originated, are now doing like beverages, dairy, soup, sauces and dressings, and that's what they now specialise in, is making things healthier. Bit of a strange way for it to go, but here, if it works for them, and wait till you see their dividend, lads. Now, the one thing I will recommend is always the investor section of any website. Here you can find any information on their shares, dividends, annual reports, everything. And the annual report for Tate & Lyle is actually quite interesting. Let me show you it here. If we go to annual reports, and there's an interactive one now. If you hit download here, it can load up. I don't have the fastest internet in the world, otherwise I'd live stream. Scrolling down, you can click anything from a snapshot of the business, growth opportunity, goes share statement. You can read everything and learn as much as you can about any business you're ever looking to invest in. Obviously, none of this is financial advice, lads. I have to say that just in case. But I just never invest in a company you don't understand. It's a golden rule across most investing channels, and I'm taking it up myself as well, because that is a golden rule. Don't, if you just see a stock that's slower, you just see some, don't. Always look into it. Read between the lines, and most importantly, ask as many questions as to why that is. Now, discovering the answers may be a bit difficult, but there are plenty of resources in this day and age for you to have a look at. There's people on YouTube that do 20-30 minute breakdowns of just the financials of a company, so I'd recommend you have a nosy, especially at this here. Now, I do want to point out, now, section 35 here, discontinued operations in the Americas. Now, this actually led to a special dividend and kind of not a collapse as such, but their stock price did tank after this special dividend once they sold those business operations. So that was a mouthful. Let's jump over to this. Now, these are products that they don't own. I just want to run that by everyone. See all this? They sold that and divested it in 2010. So now they're more of a background company when it comes to large manufacturers of food. They're in the background doing research. They've 16 labs across the globe, 3,500 employees, and they're just trying to make things healthier, and that's the way that industry's going. So I understand as to why they do it. Now, it seems to be working out quite well for them. It seems to be very lucrative. So, why not? Jumping over to one of my favourite websites, we have Dividend Max here. Now, I've just realised something. I've completely jumped over a very important part. Now, let's go to Tate and Lyle stock. Googling it here, you'll find ticker symbol TATE on the London Stock Exchange. Now, they are currently trading at 798 pence. So, £8, approximately about $10, $11, depending on the exchange rate on the day, for our friends across the water. And you can see here, British-headquartered global supplier of food and beverage ingredients to industrial markets. It was originally a sugar refining business, but from the 1970s began to diversify, eventually divesting its sugar business in 2010 to an American group, but they kept all the names and the rights to all of the products. So that's why you still see it as Tate and Lyle, and the golden syrup still exists. Now, revenue, quite good here at 2.8 billion, and they have subsidiaries in Brazil and several more. Now, I want to have a look at their stock price. Now, let's see year to date. How's it been going? They're up 0.05%, which doesn't sound great. We'll do a year, and as you can see, they're actually down 7%. Now, what of course happened here? In April, they announced the selling of their American business. I actually think they announced it way before that, but they announced the special dividend on the 24th of April, to my knowledge. Dividend Max will be able to tell me. And once they paid it out, the stock price, as you can see, went from a high of £9, bam, down to £7.60. And it's been steadily recovering ever since. Now, I am certainly looking at maybe adding this to my UK dividend portfolio, if any of you follow that. It's a company I had a real false idea as to what they did. I thought they did sugar, and that was it. But amazingly, when you do research into companies, you can find a whole lot out, and now I can tell you they actually divested all that. I know you can see it straight away here on the bottom line, but again, I didn't actually look even that much into it. So they just passed as a company I didn't look into. Dividend yield is 2.92%. Puts them in the top 25% of the FTSE for dividend payers, which again, fantastic stat. Let's have a wee look here at the 5 years. Now, the 5 years, they have had ups and downs. Their lowest point seems to always be about £6, and their highest point always seems to be about £9.50. So you have about £3 of a gap in the last 5 years, and at the moment, they're sort of in the middle ground as to where they normally peak. Now, what does that mean? Well, that can mean a million and one things. And to be honest, that's where doing lots of research and background into any company is very useful. Never invest in a company you don't understand. That is the golden rule across most of the investing channels you ever come across. And rightly so. Again, I could have invested in this company thinking the sugar that I buy is their sugar, and it wasn't. And when you find out that, because sugar paying dividends and all they do is sugar, like literally sugar, it's like, that doesn't sound... That's why in the 1970s they began to diversify. And now look at them, a giant global supplier of ingredients across the board to potentially nearly every food and beverage you ever purchase. So, let's continue on to Dividend Max. If you had 100 shares... you'd have got £107 in the previous payment. Fantastic. However, your next one will be slightly reduced down to £12.80, which is the normal rate. They pay twice a year. You can find information there, just from here, you can find everything you need to know. When it went X dividend and when it is announced. Now, let me go over what all that means. So, declaration date is when a company announces that they're going to pay a dividend. Now, once they announce that, sometimes the stock price can fluctuate depending on what they announce they're paying. Ex-dividend date is the date you must own the share in order to be entitled for the dividend. Now, if you own the share on the 30th of June and you sell on the 31st, you should get the payment alongside you're able to sell the share. Sell before the 30th or on the 30th, and the likelihood of you getting the dividend is quite low. Pay date is when it lands into your brokerage account, but again, I mentioned this quite a bit. Don't take that date at gospel, because it can be 2 to 3 days or 2 to 3 days after, just due to banks and transaction time. So let's have a nosy here at the annual dividend chart. Now, this chart, I love this chart. There's about 6 or 7 companies on my dividend portfolio that have this exact chart. It's not massive growth, but it's growth, it's consistent, and they haven't missed a beat when it comes to paying a dividend. Now, the thing is, looking on to 2021, in fact, I'll have a look here right now with you, £12.80, and they've obviously paid out that special dividend. Now, it's just the final one. I don't think they paid an interim for this, or did they? Oh, they did. 9p. Now, they seem to always pay 9p, and then they will end up paying 22p, 9p, 22p. Now, it will... This next dividend payment will more than likely revert back to 9 pence, and the 107 will jump their dividend yield for this year. So we'll probably use 2022 as a write-off for this. Now, the question is, will the dividend maintain? If they do indeed pay 9p, this is the question you have to ask, is in June, or come the 8th of June, will they end up going back to 22, 23p as an increase? or how badly would a special dividend affect, because they sold that part of the business off. Again, it's all about questioning. Just constantly question, because if you question, you can get answers that makes better, more informed decisions. That's it. Now, jumping over to my brokerage, I use Trading 212. I know there's some issues in getting signed up for it in the UK. Trust me, I've heard about that. A few of my family that are trying to sign up for it. It's been a wee bit of a wait. And then even the ones that did get in, the ICEs are a bit of a wait as well. It is a bit of a shame because I've used the other trading platforms. I'm not saying Free Trade and Fidelity and eToro were bad. I'm just saying I love the interface of Trading 212, the Pi system, and a few other bits and bobs that they have. And I'm just so used to it at this stage that I'm a dinosaur and I'm not moving. But even still, I will have a link down in the description if any are interested. It is, of course, a referral. You get a free share if you sign up, and I get a free share as well. So it's win-win for everyone. But again, I'm not here to sell you stuff. I'm just here to give you free information and links and let you make as informed a decision as you can. I'm trying to do these videos to make them as, as easy surface level as I can. I don't delve into their financials too much. I don't delve into anything too majorly because I believe in having a wee bit of independent research. You just need to know where to go. That was my biggest problem, is I didn't really know what websites to use, what brokerages to use, where to find such information, such as the investor section. Now, let's go down here. As you can see, they are based in London, consumer non-cyclical, and they are in the food processing industry. Okay, so they have a PE ratio of 23.46. I don't know any company similar to them, because you normally would work out PE ratios for across the industry, but I don't know many people or many other companies in the FTSE in food processing. So that's definitely worth a wee look at. There's a few websites. Even if you do a Google search, is it a good buy? There's 1,000,001 websites and YouTube videos that break down financials and all. You should buy it because of this, you shouldn't buy it because of that. So don't take their opinion as gospel either, but obviously branch out and get as much information for a company as you can. Revenues here plummeted, possibly due to the pandemic. I want to say from 2020 to 2021 and to 2022, that was the reason. However, obviously we'll need to see. I've had a nosy through it, their income, and just the revenue just plummeted because it has to be the pandemic. I would point to the pandemic. Although someone, if you know any different in the comments, let me know so I can, give it a wee heart and everyone else can see it. Total assets to liabilities, again, not bad. 50% debt to asset ratio isn't too bad. If you ever see it go over or hit sort of 90% plus, ask a few extra questions there. Operating cash flow was doing fantastic until 2022. Again, a massive drop. Now, does that mean that it could be a serious buying opportunity? Possibly. Again, ask questions. Ask loads of questions. And try and find out all the answers that you can for it. For me personally, for my UK investing portfolio, Tate Lyle will more than likely feature in the next video. That is without a doubt. I want to look into them and see, because I'm very interested in not so much I do like a bit of diversification, but it's their dividend, it's the growth, it's the consistent growth. Now, the divested that American side of their business, obviously in April. Now, how that goes to affect them coming into the future, I'm not too sure. As you can see, it's been a wee bit rickety over the past couple of months for them. Maybe it's leveled out, maybe it's going to rise again, to another high. Who knows? Again, I'm going to have a wee look in deeper myself, but I hope I've given you all the tools that I can. Again, what I'll be listing is their investor section for their website, Dividend Max, and of course Trading 212 for anyone that is interested. Yes, thank you for joining me, everyone, and let me know what you think in the comments. I love to hear discussions. I love to see people put in whether they have it in their portfolio, whether it's something they would get into, whether it's one they stay away from. It's always great to hear you in the comments. I love chatting to you. So yeah, I'll see you all in a bit. Thank you for watching.